Every Hello, everyone, and welcome to the 5th episode of the Zeneration Nation podcast. Today I'm here with Kyle Shaeffer. He's my guest speaking, and we're going to talk about insurance, fraud. We're not going to talk about bookkeeping because you don't do that thing that we talked about, and we'll get into it because I am great with technical terms. So why don't you tell us a little bit about yourself?
Sure. So my name is Kyle Shaeffer. I work with H2 Advisors. We are a jack of all trades accounting firm. So we do your traditional accounting, monthly bookkeeping, financial statement preparation, tax preparation. The only traditional accounting thing we don't do is audits. But other than that, whenever you hear CPA accounting, that traditional stuff, we do that. But we also specialize in different areas. We're more than just, your typical CPA firm. We have business consulting services we offer. My expertise is in fraud, forensic accounting, and business valuation.
Cool. See, because I need a lot of this because I am a new business owner and I am also someone who's been very irresponsible with their finances. And by that, I mean, I legitimately have not tracked them ever. This is the first year in my life I've ever tracked them. And I'm 23 now, so you can see how great that's going to go. So let's talk about tracking finances because that's something you do, right?
Sure.
How would someone it doesn't have to be a business owner, but how would someone just what do they definitely need for maybe taxes or just keeping track of their own stuff? How would someone do that?
Sure. I mean, personal finance, a lot of the talk we have is about businesses, but I think it's important to have that understanding from a personal background as well, because they don't really teach that in school.
I can
nowadays.
attest.
They don't teach you how to do taxes. They teach you geography and calculus, which no one ever uses.
Mm-hmm.
But so from a personal finance perspective, it can be as rudimentary or as advanced as you want it to be. It all comes down to record keeping, and I'm not talking about saving receipts. People have this concept that they need to save all their receipts, and truthfully, that only comes into play if you're going to be audited.
So what you're saying is it's okay that I stopped saving my receipts after I bought everything.
Yes, receipt saving comes into play if you're ever questioned about the legitimacy of your expenses. And like I said, that only comes up in an audit, and really the likelihood of the average Joe getting audited is very remote. And it's just not worth having a bin full of receipts from when you went to the gas station over the last year, or you went to Staples or whatever the case may be.
I know someone who has a binder for the entire year, and
Sure.
they have a page for every day in the year, and they staple the receipts to the page.
It's not necessary, but again, you can make it as rudimentary or as advanced as you want it to be. What it really comes down to is just keeping track of your expenses, and a lot of times, with mobile apps now, it's become very easy to just look up on your phone. Most people are doing it to make sure they have enough money in their bank account.
Oh, yeah.
But you can look at, okay, what did I spend this week, and do a quick little calculation on what your net earnings or net loss is for the month. Obviously, you don't want to be operating. You don't want to be living past your means, spending more money than you're making. So somebody just getting into wanting to track their finances, you could just do a simple Excel spreadsheet, and you say, okay, here's my income. That's going to be positive numbers on my spreadsheet, and here are all my expenses. And maybe you don't care about how it's classified at first. Maybe you just care about where your money is going. So I went to Target and spent $30. I went to Walmart and spent $40. I went to Blue Highway and had dinner.
So just knowing what you're getting in and then putting or sending out is just good enough in a basic rudimentary terms of financial accounting, right?
Sure. So you want to know, if we're just talking about simply input versus output. Am I spending more than I'm making? All you
Hmm.
care about is the number. You don't necessarily care about where it's coming from or how it's categorized. So we can move to that second phase of, okay, now not only do I care about what's in, what's out, now I care about, okay, what am I spending on food?
Hmm.
What am I spending on, medical expenses maybe? What am I spending on just personal fun items, video games, things like that? Again, we're talking personal expenses, not business expenses.
Yeah.
Businesses shouldn't be paying for video games.
Well, I mean, it depends on what your business is and whether or not
Very,
you.
very true.
I mean, if your business is, criticizing video games or playing video games, then maybe keeping that in there. Yeah,
Very true.
sometimes businesses have fun with what they spend their money on, right?
Yes, yes,
And that's also a part of the business.
yes.
See, I gotcha.
In those rare cases, yes, businesses can be spending money on video games. But again, we're thinking about just the average
Hmm.
layperson here. So you can still do that in Excel, but that becomes a little bit more complicated because you're going to have more columns. You're now going to have not just the amount, but you'll have across the top you'll have a column for meals, a
Hmm.
column for clothing, a column for medical expenses, so on and so forth. And it's not going to be presented in a way that is easily read
Hmm.
to you, because ultimately when you're tracking your finances, you want to be able to make it understandable to you, because you're the one that's going to be looking at it
Hmm.
at the end of the month or the end of the year or whatever, end of the week, whatever the case may be. So if you're just throwing numbers in and sort of randomly doing this, it's not going to be useful to you when you go look at it. So there are programs out there. And this is when we get more from a personal side to a business side. So the most common accounting software used is QuickBooks.
Hmm.
They now have an online platform, so you can access it anywhere on your phone, on your computer, at home, on the go. You've got access 24/7 to it. So what QuickBooks is a more sophisticated version of that Excel spreadsheet.
Hmm.
So it's a database that has separate accounts. So a meals account, a clothing account, whatever the case may be. You can set up vendors, which would be your Walmarts, your Targets, your Blue Highways. And at the end of the week, at the end of the month, however often you want to, you can go and run a report and call it a profit and loss or an income statement. And you can see, okay, this is my revenue
Hmm.
for the week. These are all the expenses and where they came from. And what that allows you to do is now customize that report. So if you only want to see how much money did I spend only in meals
Hmm.
this week, why is meals so much higher this week compared to last week? You can go in and easily, with the click of a button, compare what happened last week, what happened this week. Did I go out? Did I go to um, Little Caesars more, or whatever the case may be?
And so where does the benefit of doing all, because there's clearly a lot of work and well, I guess a lot of work over time, right? A long time of inputting numbers. But where does the real benefit come in? Because I mean, now you can see your numbers now, but where does this give you a realistic benefit?
Sure. So the very first thing is you only get a benefit truly if you're able to keep up with this very regularly. So it's one of those cases of the more you put it off, the less likely it is it's going to happen, because you can get easily overwhelmed. And if you're using a program like QuickBooks, they try to help you to where you can link your bank account
Hmm.
and it will automatically download the transactions. And you can tell QuickBooks, hey, anytime you see Best Buy, a charge from Best Buy come in, automatically code it to office and miscellaneous expense. Anytime you see Paisanos,
Hmm.
automatically code to meals expense. And the benefit of that, again, from a personal perspective, is it just gives you a better understanding of where you're spending your money.
Hmm.
And it helps you identify, are there any areas where I can cut back? So if I am spending a lot in meals, I'm eating out a lot. Number one, you might see that on the scale every morning. But number two, it's like, okay, well, that's an area that I can try to cut back. I'll eat more at home instead of going out. Or let's say you're trying to save or plan. You need to know, okay, I know I want to go on this trip, or I know I want to purchase this particular thing, or I want to buy a house, I want to buy a car, I need this much for a down payment. How much can I save? Well, other than, if you quickly look on your app and say, okay, well, I've got $7,000 in my bank account, that sounds great, but what is coming up, first of all, and based on my history of spending, can I afford a $200 car payment or a $300 car payment? Or do I have enough money to put that down payment on the house, or whatever the case may be?
So then, where does this come in for a business, and then what you end up doing? Because you go through, you don't go through their finances, right? Or my bad, you don't audit what they have and the legitimacy of their purchases. You scan through their financial transactions and then find out if something is like erroneous or something, right?
Well, so it's kind of multiple questions within that
Yeah,
question.
that's okay.
So first question, how does this apply to businesses? So everything we talked about is exactly applied the same to a business. The only added aspect is now we're going to use these reports to create a tax return. So obviously every business needs to be filing their taxes timely. So in order to do that, you need to know all of your income and all of your expenses. So having it, again, keeping up on top frequently helps. And you're able to quickly prepare a tax return or give it to someone to prepare a tax return. When it comes to the legitimacy of those expenses and where a business like H2 comes in is we do not perform audits of companies, meaning if there is a company that needs to be audited for government regulations or for let's say like it's a nonprofit and it's got to be audited.
What is an audit? Because I don't think I actually fully understand what even an audit is. I mean, I hear the word, and to me, it's like a big scary word of, oh, you're in trouble for something.
So an audit from a tax perspective means the IRS either has randomly selected you to be audited. Congratulations.
Oh, thanks.
Or there are red flags on your account associated with your social security number, or if you're a business, your employer identification number, your EIN. And they are questioning whether or not the amounts you reported are correct and valid.
So you mean spending or income?
Both.
Both.
So the IRS is given forms in the form of 1099s, in the form, many different forms. We could spend a whole 3-hour conversation on the different types of forms the IRS has.
Oh, I'm sure.
But essentially, let's just say each of us own a business, and I am paying you for some type of service. When I pay you, let's say I pay you $700 for you to perform this service for me.
All right. At
the end of the year, I will fill out a form called a 1099. I will give you a copy that says, hey, this is how much I paid you. I'm giving that copy to the IRS.
Okay.
Saying, hey, I paid this company X amount, so you should see on their tax return income equal or greater than this amount.
Okay, so I'm going to sound really stupid and ignorant for a second.
It's okay.
So I pay rent here at the CEP building, right?
Sure.
So I pay them a certain amount each month. Do I have to get a form from them saying that I pay them rent when I have to do taxes?
There is a 1099 is there's a box for rent, and it's you would be giving them the form.
Oh, so I have to go get the form.
Correct. We can talk all about this.
I know very little. I'm just letting you know.
And again, this you got to tiptoe around it a little bit. When it comes to the IRS rules, there are obviously laws put in place. So as the law is written as it is designed,
Hmm.
you are to follow.
Okay.
A lot of people either willingly or negligently do not follow the laws. It's the willingly not following the laws that gets you into a lot of trouble.
Okay.
The negligently not following the laws can get you in trouble, but it's the willful nature that is more deadly is a bad term, but you know what I'm trying to say.
Well, it's a good thing that I fall into the negligent because I legitimately don't know what I don't know,
Sure,
and I definitely don't know anything about taxes or anything like that. So
sure.
you start saying things, and I'm like, oh no,
Right,
do I have to
right,
know this?
right. And there are obviously some instances where the laws state that you
Hmm.
don't have to, like, the reporting standards don't follow for everybody.
Okay.
So again, we could get into all that at another time. But you bring up an interesting statement there of you don't know what you don't know,
Hmm.
and that is what we find in not only our tax and bookkeeping um, section of our firm, but also in those other areas, the business valuation and the fraud and forensic areas. So either our clients don't know anything about business valuation or fraud, or they're completely oblivious to what they should be doing to protect themselves.
Mm.
So, like I said, while we do cater to the needs of clients in that traditional accounting area, we also try to cater the needs in all areas of business, really, where we can help.
Got it. So, what would you do for someone who finds themselves in an area where they need someone to go through their stuff? How does that exactly work? Uh,
So the way any engagement works at our firm is whatever you need, you call us. We have you come in. We'll have a meeting with you,
mhm.
and this is a complimentary meeting. We're not going to charge you for this because it's just sort of it's an initial assessment. It's kind of like a consultation, if you will.
Mhm.
So you can go to different medical firms and get consultations for many different things, just so you know what to expect. Or you're looking to remodel your house and you're going to have a contractor come out and he'll just give you free estimates or whatever the case may be. So you can sort of think of it in that vein. So you'll come to our office and we'll just have a chat with you, and you'll tell us what's going on, why are you here, and how can we as a firm serve your individualized needs. Can we serve your needs? Sometimes we can't. um, if we talk about the fraud aspect of it, perhaps you're looking at those financial statements that you have prepared and things just are seeming off. The clients that are coming in,
Mhm.
that everyone's paying, at least you think yet the bank is always low. You're always having to put money of your own in. So things just aren't adding up. So again, you would come to us, and we call that a fraud checkup. So what we would do is we would schedule a time with you as the business owner to show up at your business and pretty much do a very thorough overview of every process in place in your business.
So, is that like spending process, or are you talking about like more of a financial going through?
It's literally everything. So again, this is all dependent upon your special
Mhm.
circumstance, but the list of things we would do is not all inclusive, but it could include interviewing every staff member,
Okay.
because if you think about it, fraud is being perpetrated by somebody there,
Mhm.
and if you talk to somebody, you might be able to get an understanding of where they're coming from personally.
So what does the fraud usually look like? I mean, what are the signs that you use to do? You like talk to somebody with like a big spotlight and go, "Did you buy this thing?"
No, so if we do suspect somebody of stealing,
Mhm.
uh, the very first step is we would talk to you and we say, okay, listen, Melissa has been stealing from you. We haven't seen anything like we in terms of numbers. We haven't done any extensive research, but you think this is happening. What is your goal? Do you want to seek restitution from her through the court system? Do you want to criminally prosecute her?
So do you actually like help businesses go after people who have committed fraud against
Absolutely. So if you as a business owner, let's say you figure this out on your own and you go to the police, the police are going to say, great, get a lawyer. You're going to go to a lawyer. Lawyer's going to say, great, find someone who is certified and has the credentials to support your claim. Because you as a business owner just saying that isn't going to hold up in a court.
So you collect the evidence so the evidence specifically has to come from someone certified, and that's where you guys
It doesn't have to come from somebody certified. You don't have to be a CPA to prepare financial statements. You don't have to be a CPA to prepare a tax return. But with that credential, it holds more weight coming from that person. So as a certified fraud examiner like myself, a judge will see, okay, they are an expert in this area, so their opinion holds more weight.
So you'll help me take Melissa down.
Correct.
Yeah.
So, as a professional, I cannot claim that she is stealing money.
But you can show
as a professional, I can say
accounting records saying that something's up.
Correct. Here. As a professional, I can say this money went missing. She is the only one that has access to it. If she is, it is up to that line. I don't connect those dots. I give you the dots, and I give the judge dots or the jury dots, and leave it up to them to figure out how it needs to be connected. Because as a professional, I legally cannot say she has stolen from you.
Really? That's interesting. So then, what is the signs besides? So back to the interviewing, right?
Right.
How does it you tend to figure out? Like, can you figure out that they've done these things through just interviewing, or is it strictly through the numbers only?
I mean, it's not going to be any one thing, but what the interviewing process does is, when we talk about communication between two people, there's statistics out there that say 20% of the communication you give is what you say, 80% is nonverbal. While I don't know if it's really that drastic of a difference, there is something to be said about nonverbal communication. So, you and I are sitting here talking, and we're in a very relaxed setting. There's no pressure on either one of us other than the cameras and the microphones in front of our face.
The microphones are there for effect.
So we are very relaxed. Someone who is nervous or worried, they're going to give off cues, and it's not going to be like you see on CSI where it's obvious necessarily. It can be at times, but you're going to be able to pick up on those nonverbal cues. Again, it's not saying, oh, they're definitely lying because they're sitting there folding their arms and they have their eyebrows crossed and everything. They might just not want to talk to you. They might want to get back to whatever they're doing. So it's not necessarily just that interview that says, okay, they're definitely the perpetrator or whatever. But what the interview does is just give more information. So when we talk about the mindset of somebody who commits fraud, there are three key aspects. They have the opportunity. They have the ability to rationalize what they're doing. And they have a reason for doing it. So let's say it's an office manager, and they're going through a rough time. Let's say they're having a divorce. They're getting a divorce. So call it Melissa. Melissa's the office manager at your business. She's going through a divorce, and it's rough for her, and she sees this opportunity because she's the one that receives all the money.
Mm-hmm.
She's the one that deposits the money. She's the one that records the deposits. Let's say she's really just wants to go out to Disney. She wants to forget about all this divorce stuff. She just wants to go to Disney. It's pretty expensive to go to Disney. So let's say she takes $200. That'll get her in the door and maybe a bucket of popcorn.
Maybe.
But innocent enough. I'll pay it back. And then
They never do.
they never do. She never does, because the next week her light bill is due.
Mm-hmm.
And she had to move out and get an apartment because of the divorce. And she doesn't have the money to do it. So she has a couple options. She can either use a credit card and incur some interest. She can get a loan out maybe.
Mm-hmm.
Or, hey, last week I took that $200 and no one said anything. So I guess they don't really notice. I'll just take $50 to pay my light bill.
And that's what I get for taking her out for dinner. Just trying to be a good boss.
So again, it goes into the psychology. So if I interview her and I see that, or I hear her talking about this divorce that she's going through,
Mm-hmm.
I'm not saying, oh, well, she's definitely taking money
It's
because
just
she's going through a
signs.
divorce. It's like, okay, well, she has the ability to rationalize that. She also has the opportunity.
So you've got motive, opportunity.
It's just like a murder case. I mean,
Yeah.
I hate to compare the two because of how intense a murder case is. But it's
well, it's the process
very
of a
similar.
crime, right?
Correct. I mean, it is a crime being committed if you're stealing
Mm-hmm.
from anybody or any business. It's obviously a crime, and a lot of times we talk about the cash, just taking cash or taking checks, whatever the case may be.
Mm-hmm.
But there are many different schemes out there, not centered around cash, because cash is less and less becoming more prevalent
Mm-hmm.
in modern day business. So, a big area now is personal expenses with company credit cards.
Mm-hmm.
So again, let's take a different person. We'll call him Mike. Don't want to, offend one gender over the other.
Yeah, poor Melissa was just getting absolutely creamed here.
So we're done with Melissa. We'll move on to Mike. So let's say Mike is in charge
Mhm.
and in his business. He's not the owner, but he has been tasked with making all of the purchases for the company, using the company credit card for office supplies, computer equipment, anything the company needs. He has access to the company credit card.
Mhm.
He goes to Best Buy and purchases the computers. He goes to Staples and gets the office supplies. Well, let's say that Mike is working 2 jobs,
Mhm.
and the second job he works is a remote job. So he works from home on nights and on the weekends. In order to work from home, he has to have a laptop.
Yep.
Let's say his laptop dies, and now he has no way of making that secondary income, which he relies on to
Mhm.
feed his kids. So let's say the office needs some things from Best Buy, some cabling, or maybe a new computer as well. And so the boss, the owner, says, hey, I need you to order this from Best Buy. I got you. He goes to Best Buy. He gets what the company needs. And then he also gets that laptop for himself because he needs it to, feed his kids.
And so how do you track down someone who's purchased something like that? So when they've gone out, and doesn't it just show up on the company or the finances that it just as like a big purchase from Best Buy? It doesn't tell you exactly what was inside the market basket.
Correct. So this goes back to what we were talking about with tracking your finances. So we would go back to the QuickBooks file,
Mm-hmm.
and we would look at, there are several different accounts that are more susceptible to things just kind of being stuck in there. Office and miscellaneous is one,
Mm-hmm.
mainly because that's just the catch-all for other business expenses. Or we could do searches, but let's just keep it simple. We look at all of the expenses coded to office supplies for the year, office and miscellaneous for the year. We just kind of scan through, and we'll pick out large expenses compared to the other expenses. So we'll probably sort by name, and so we can say, okay, if we look at all of your Amazon purchases, they're normally in the range of $15 to $50. We look at Best Buy, you're normally in the range of $45 to $150, but you had this one expense that was $900. Well, what was that for? And we'd go and we'd ask the business owner, hey, you had this unusual expense. Do you know what that was for? Oh, well, that I do remember. Yeah, we needed a new office computer, so I sent Mike out to go get one. Now we go to Mike and we say, okay, hey Mike, do you remember going to Best Buy? What did you get there? And he said, oh, I got a HP Envy laptop for the office.
Yikes, for $800 or $900?
Right. Okay. So then I look, okay, well, if I go on Best Buy's website, I can see that Envy, that's probably a bad example because my numbers are going to be way off, but I can see that Envy, like if that's all you purchased, that doesn't equal what was charged to the credit card. And you kind of, go to the rest. The biggest issue with all of this is cost benefit. So we talk about what are the benefits of taking the time to track your finances. Well, what are the benefits of paying somebody like myself to come in and find out that someone is stealing from me versus the costs associated with that? And that's why I said the very first step is to have that conversation of what do you want to accomplish? Because if you have no thoughts of prosecuting this person or no thoughts of getting restitution from this person, you don't need me. Fire them and be on your way. Now, the key with that is because Florida is a right-to-work state, the boss can say, Mike, your services are no longer needed. Please gather up your stuff and go.
So when they do want to prosecute or something like that, how does that end up? Like how often how often does that actually happen when you're involved in something like this?
Very rarely.
Really?
The prosecution, very rarely, because of the cost associated with it.
Do they just not take enough that it's worth getting the restitution?
Well, it depends. I mean, it depends on the amount taken. It depends on the company. If someone it was in the news several years ago that the office manager of the Hilton here in Ocala.
Oh, really?
Took several $100,000 over the course of a couple years.
Wow.
And the way they were doing this,
100,000?
Yeah, it was more than 100. I don't remember the exact amount. But the way that the office manager was doing this was when colleges would play UF in football, they stayed at the Hilton here in Ocala. So the checks that were written from the colleges and universities that came into the Hilton, this person would take.
They just took the checks, and then the people stayed there.
So that's obviously big amounts. Now we're talking about the Hilton, which is a well-respected. I don't know the details of all of that.
How would they get the checks?
I wasn't involved in that case, unfortunately.
That was just kind of mind-boggling because if they're getting a check, isn't the check written out to the Hilton, not manager at Hilton?
Right. So in terms of how that person is able to take the check and use it for personal gain, we can get into that a little bit. But I say that to say, it's the Hilton. So obviously the Hilton has a reputation to uphold. So they are going to go after them, and they have the legal capabilities to do that and the financial capabilities to do that. But let's say someone takes from what's like a local O'Malley's.
Okay.
someone takes from O'Malley's. It's a restaurant and bar, which, just side note, restaurants and bars are very susceptible to fraud because of the cash they deal with, and if they have a bar, the liquor aspect. I am not saying that is happening at O'Malley's. I'm just using them as an example. So we take a place like O'Malley's or any local restaurant. They might be operating day to day. Like if they don't make enough money in a week, they can't cover payroll. So they don't have the ability to pay somebody to do this. They know not to, knock on the types of employees at local restaurants, but chances are, if you do go after them, you're never going to see the money anyway.
Yeah.
It's just the common trope of, you're spending all these legal fees for this civil case
for something that's not going to benefit you in any real way besides just, you gotten rid of them and what, maybe they get blacklisted from the job type. You've
gotten a judge to say you have to pay. It's just like with child support. A judge can order someone pay child support. They never pay it and nothing ever happens because it's small fish in a big ocean in terms of what they have to, deal with. So again, there's a lot of factors to go in. That's why we don't see cases that go through the prosecution process. Personally, I've dealt in the majority of the cases I've dealt in either never make it past that initial consultation, or when we say, okay, hey, look, this is how much time we spent on this project. We can prove 10,000 has been taken from you. We can estimate another 10 to 20,000 has probably been taken, but it's going to cost you this much money to prove that extra amount.
How often does this type of thing occur? Like, is this a common thing that happens, or like, does you just get approached by a company that's like, something seems off this year, and then you look into it? Or
how often do I deal with it, or how often does it occur?
How often does this generally occur for a business? Is this like something that reoccurringly happens, or is it just like a rare thing that happens maybe to like every couple businesses in like a big old pool, or is it like just a widespread type of issue?
So I don't have statistics, but what I do know is that small to medium-sized businesses are more susceptible to have fraud occur than large corporations.
Okay.
And the reason for that is in small to medium businesses, you obviously have less people, meaning all of those important duties can't be separated for, I talked when we were talking about Melissa, she was receiving the money, depositing the money, recording the money. Maybe it's because no one else in the office can do that because it's 5 people in the office, including the business owner. So we see fraud happen in small and medium businesses because of just lack of staffing. We see it happen more so, though, or maybe in conjunction with the fact that in small to medium businesses, the business owner knows their craft. They know their trade. They don't necessarily understand the business aspect, the finance aspect of it.
Yeah, I can attest to this majorly.
So they push that aside to somebody else whom they trust. So when you put somebody whom you trust in a position of power, in control of your finances, you are setting yourself up for disaster. Because it is the people that we trust the most that hurt us the worst, unfortunately.
So then is a good countermeasure to this just like whenever you have a financial type thing, you have 2 people like working on it just to keep, the absolute power of it from corrupting?
So the best way to prevent fraud in a business is to segregate duties as much as you can. And by that, I mean you want to separate whoever holds the asset. Primarily, we're talking about cash. Whoever records the asset, and whoever has access to like physically handle it. Again, it doesn't have to be cash. It could be products.
Hmm.
So let's talk about dental offices. So whenever you go, and I know people only go to the dentist like twice a year, but every time you go, you'll notice at the front desk they have those Sonicare electric toothbrushes for $250
Oh my God.
or 100, whatever they. I mean, they're overpriced.
I'll have to look tomorrow. I'm going to the dentist.
Okay, so
Yeah.
you'll see what I'm
Oh, I
talking
will
about.
look now.
They're all these products, right?
Hmm.
So obviously, it's important to keep those maybe locked up. Like you don't want to just have your entire supply where anybody can get. I mean, not that people want to steal Sonicare toothbrushes.
I don't know. You've
but
talked
you
them
never
up
know.
now. They're $250. That better be a good clean.
I know I'm an accountant and I should be good with numbers, but I'm pretty sure all of the prices I've thrown out today are way off, whether it be the $900 Envy laptop or the $250 Sonicare toothbrush.
I don't know. You go to Staples and they'll get you $900 for that laptop.
That's very true. So number one would be segregating.
Hmm.
Where you can't segregate, you should monitor or have some type of check and balance in place. Again, this is one of those areas where you could pick any one topic we're talking about here
Hmm.
and spend another hour-long session talking about it.
Just going through it, like in the finite
Correct.
comb of details.
Correct. And really, that those are the textbook ways of preventing fraud. But really, if you want to get down to the nitty-gritty, the number one most important way of preventing fraud is educating yourself on it.
Hmm.
So a lot of people, like I said, in small to medium businesses, they understand their craft and they handle they push all the money things for someone else to handle.
Yep.
If you as a business owner are not looking at your finances, your financial statements on a regular basis, you've got people to blame, but you also have yourself to blame for anything that happens.
So when you guys do this kind of stuff after the first time, do businesses or even just people in general, do they like set up like maybe a yearly like checkup to go through this, or does the kind of fraud happen once and then they have you guys come in, look at it, and then as soon as you're done, they just don't ever contact you guys again?
When we talk about the three main areas that we focus on is the prevention, detection, and correction of fraud. So the prevention method is what we're talking about with the segregation of duties and the education of it. That would be that fraud checkup that I mentioned earlier, someone coming in. Detecting fraud would be, hey, I think this is happening. Can you look? And we would. Correcting fraud is, this has happened. I want to make sure it doesn't happen again. Typically speaking, once we come in and we didn't really finish that process of what that fraud checkup looks like, we kind of steered after the interviewing process.
Oh yeah, exactly. Don't worry, I do that all the time.
But so included with the interviewing would be, looking at just the procedures in place and where there are areas that fraud could occur. So whether it's cash is received, it sits in a drawer unlocked, anybody can access it. We deposit twice a month.
So that's what you mean by procedures, is just the things that the company does with, or I guess just the weak points of where money could go missing. Wherever there's like a transaction that happens, you look at to see what is the norm for that type of transaction. Correct.
And so this is your business's norm. This is where that can be problematic. This is what we recommend you do. So in terms of that prevention stage, and really any of the stages, but if someone comes to us for help, our goal or hope would be that we give you these suggestions, you actually follow through with those suggestions, and you don't need us anymore.
Okay.
Because if you came back to us, our very first question would be, okay, did you do what we told you to do? No. What'd you think was going to happen?
Do you get a lot of people who come back then? Like
I mean,
where something messed
we
up?
we don't want to have repeat clients.
But does it happen?
We have not. No, we
Okay.
have not had.
So you must be doing a good job.
And to be fair, this is an area relatively new for us. I mean, I've only been doing this since 2017.
Okay.
Is when I got certified. So it's not like I've got. I mean, obviously, I'm not 50 years old, so I don't have all these cases under my belt.
Are you sure? I think I might see a little gray hair up there.
That's just from having a child. So
Congrats.
thank you. So our goal is that we don't have repeat clients, because that means either the same person is doing it because they wouldn't get rid of them the first time, or they found somebody doing something very similar, which we don't want to see. In that fraud realm, it's not like we want to push to get it. We don't want to have 50 clients call us in a month saying, "Hey, I need your services."
It would be
I
nice.
mean, it's great from our perspective, financially, but at the same time, the human heart in me, which some people say accountants don't have a heart, but I disagree.
Well, at least you guys have the integrity to not want the problem you solve to be a reoccurring one.
Correct.
Right?
Correct.
You want new customers, not reoccurring.
I guess if you want to look at a silver lining there, yeah.
I guess that's a silver lining.
We really don't want it to happen in the first place. But
I want to be out of a job by the end of this year.
Well, that's why we're not focusing solely on that area. We don't focus solely on the bookkeeping and the tax. Some people say it'll become fully automated. I disagree, but we don't like to focus on one area in case something like this happens. I mean, it's very rare to be able to say, okay, if I'm only doing fraud, I'll be sitting here like this most of the day, just twiddling my thumbs, because I'm only going to be working on the cases that come in, and they're not just abundantly flowing.
So then what is it you work on most times then?
I'm sure there are some people in my firm who would argue with this statement, but I can do whatever I need to do. Primarily, it is business valuations when it's not forensic accounting. And just real quick on forensic accounting, forensic does not mean fraud. It's more akin to audit, except, I don't know if I ever answered your question about what is an audit. I guess I did from a tax perspective. From a bookkeeping perspective, an audit is attesting that the financial statements that you're showing to investors, to banks, that you are showing to anybody, are accurate and fair.
So when I go, yes, my business makes $100,000 and it's only making nothing,
Right.
You make sure that the people who are trying to invest are like, oh yes, he is making absolutely nothing. Congratulations.
So financial statement fraud was very big in the late 90s and early 2000s. There are a couple companies. Enron is the biggest one, where they told investors, hey, we expect to increase our earnings by X percentage. And when that time came and they weren't, the CEO essentially said, make it happen.
And so this is where cooking the books is, right?
Exactly. This is where the term
pumping
cooking
up
the
the numbers.
Yes, exactly. So forensic accounting is more akin to audit, except we're not looking for accuracy in presentation. We're looking for accuracy in general. And the most easy way to explain that would be in a divorce case.
Okay.
You have a husband and a wife. Let's say they're 50-50 owners in a business. And the husband says, well, she always spends, all this money every year on her hair and her nails, and she does all this stuff that I don't see. And she says,
classic business expense.
Exactly. And she says, well, he's always going off to Jamaica with God knows who. This is why we're getting divorced. So you have this dispute over who is entitled to
The business's money.
Maybe not entitled to the business's money, because as 50-50 owners, they're each entitled to 50%. But in terms of distributions, personal use, using business money for personal use, who's using it more? So forensic accounting, the term we would use to say, okay, let's look at all the transactions. And it goes back to that whole thing of looking through all the office expenses and business, personal, and the whole 9 yards. So that in 45 seconds is forensic accounting. So besides that, which fraud is kind of lumped into that, but I have to make the distinction. Forensic accounting does not mean fraud, but you perform forensic accounting to discover fraud.
Okay.
So besides that, my other area of expertise, if you will, although I am not certified yet, is business valuations.
Business evaluations. Okay, you're going to have to explain.
So,
what do you mean by business evaluations?
So business valuation is, unfortunately, accountants, they're not very clever with their terminology. So the definition is what it sounds like. We are assigning a monetary value to a business, or essentially we're giving a business worth that you and me would understand through a dollar value.
Okay.
Business valuation is performed for a variety of reasons. Again, divorce could be one. So again, that same example, 50-50 owners. If husband wants to buy the wife out or vice versa, how much does he or she need to pay to buy out? In normal buy-sell arrangements where you're 100% owner, I want to come in and buy 50%. You want to make sure that you're getting a fair price for me purchasing in. I want to make sure that I'm paying a fair price for purchasing in. Or, go into more of a legal setting of eminent domain. So that's where a governmental body is going to take a piece of your land and or building for a road project. So here in Ocala, the biggest one most recently is off of 36th Avenue. So they're building the bridge over the railroad tracks on 36th Avenue. Yeah. There are a dozen plus businesses along that road. The radio station KTK is over there. Panther Printing is way down over there. There's like a whole little strip of like 4 or 5 just random businesses there. So in the state of Florida, when you have an eminent domain case, a business owner is entitled to receive compensatory damages for them taking part of their property. So we've got that area. There is also sort of another litigation support lumped in with business valuation we call business damages. So a way to explain that would be, let's say you're renting, you're leasing, you lease this office space here.
Yep.
Let's say all of a sudden, I don't want to talk bad about a CEP, so let's not use that as an example. Let's say you're renting office space from Joe Smith.
No, not Joe.
At a different office, and you have a lease agreement for 5 years. And let's say in the middle of year 3, he decides, I don't want you here anymore. You're out. You have 30 days to leave. All of your business stuff is here. So you're going to have some downtime in packing everything up and moving to a new location and everything like that.
And so you evaluate the cost of the time or the money you would make in that time if you didn't have to move, and you're just not operational.
Exactly.
And then they have to pay that out for breaking your contract.
Correct. So your business damage claim is my lost profits from your illegal or wrongful act of terminating our lease agreement.
Okay, and that's one of the things you do.
Yeah.
Okay. So you talked about business pricing, right? The value.
Mm-hmm.
What would your rough guesstimate for my business be? Because I'm just curious. And it's not a visual. What's your guesstimate for this business's evaluation?
That would be like you calling a plumber
Mm-hmm.
and you saying, hey, my bathtub doesn't work or my shower doesn't work. How much is it going to cost me to fix it?
Mm-hmm.
If you can find a plumber who's going to give you an answer, don't use them because you can't value anything sight unseen.
Mm-hmm.
And not just physically being there, but looking at books and records.
Okay.
When we talk about business valuation, there are 3 acceptable methods to valuing a business.
Mm-hmm.
Or three approaches. The first one is the asset approach. This one very easy to make synonymous with buying a home. So when you go buy a home, you look, or your realtor will hopefully look at what comparable houses are, or comparable, however you want to pronounce it, are in the area.
Mm-hmm.
And we'll say, okay, based on all these houses in the area, the house you want to buy is worth X. Same thing with businesses. Let's say you're a restaurant. And you have some parameters on the size of your business based on number of employees, income received, things of that nature. We have subscription services that will allow us to go in and look at transactions of quote unquote similar companies.
Okay.
And see what did they sell for. And make the determination of I'm so this is the market approach. This isn't even the asset approach. I don't know where I was going with that.
You got off track. Don't worry.
I'm jumbling everything around.
I have that effect on people. You ever seen Rick and Morty? He talks about the Morty waves and the Rick waves.
Yeah,
I got that. It's called the scramble wave.
I definitely just got scrambled.
Or the off track wave.
Market approach is the housing situations. Everything I just said was market approach, where we take your company, we try to find comparable companies and assign a value to that. The asset approach, which is what I was trying to talk about at first, I made it pretty far without making a mistake, so I think that's okay.
That's all right. Mistakes are fine. It's casual. This isn't CNN, MSNBC, Fox News. It's not a professional interview. It's just a conversation between 2 guys. Imagine it like we're in a bar meeting for the first time and you're telling me what you do.
So the asset approach would be primarily used for businesses that have a lot of assets. So think a car dealership.
Okay.
So a value of a car dealership isn't necessarily going to be defined by the money they're bringing in or what the car dealership across the street sold for. It's going to be their inventory.
So is that what you would do for my business then? Because my business is majority assets at the moment.
It brings up a good point of where your business is currently affects the value, because as a startup, it takes 3 to 5 years to become profitable.
Yep.
But that doesn't mean your business has no value. So again, without looking at everything, I wouldn't be able to say. But if you only had assets, you didn't have any income or whatever, then yes. If you were to sell your company, because you got to think about it like this. Somebody who's coming to buy my company, what are they buying? They're either buying your assets or they're buying your capability of generating income or cash flow. Or maybe...
What about the customers?
Customers, exactly.
Because I know for landscaping, when you buy out someone else's landscaping business, you buy their customer base is what you're really paying for.
Correct. And a lot of the, when we assign a value to a business, that doesn't mean that's what you're going to get. That's just your starting point. It's kind of like when you're trying to sell a house. I probably shouldn't use this analogy because I got scrambled last time, but I'm going to go with it. When you go to sell a house, you don't expect to get what you list it for. In fact, you're going to list it higher because you anticipate them coming down. So when we do our valuation process, we're not saying this is what you're going to get. We're saying on paper, this is the fair market value of your business, which means if you have two separate parties, a willing and able buyer and a willing and able seller, this is the amount they would agree upon in given certain circumstances, essentially. So, you know, with the asset approach and the market approach, they're very dependent upon the type of business it all depends on the type of business you have, but specifically those two approaches, it depends on what you've got going on in the business. The third and probably most common approach is the income approach. And as you might guess, what you're doing is you're analyzing the income of the company. And it's not just bottom line income. It's the cash flow, the cash generating power of the company. So we again, we could get into all of that, but essentially it's how much cash is my business generating based on revenue and expenses. And we look at historical performance. Based on the historical performance, based on where we know you're at in terms of location, based on capacity, based on employees, based on projects in the future or goals of things to accomplish, this is where you're going to be. Okay. And we're able to take historic, project into future, combine all that, assess a risk component to it. So how risky is, if I'm buying into this business, I'm making an investment, how risky is that investment? And doing some math and coming up to a number.
I'm actually kind of surprised at how much it is you cover, because in my head, when I first heard you speak, I'm like, he does fraud investigation. I was like, that's cool. Let's see how that goes. I'm surprised that there's, I guess, so much more evaluation in terms of like, the kind of housing evaluation, just figuring how much something's worth in what you do. It seems like you do way more than I initially gave leeway for in my mind. Is there other things that you do for it too?
Well, have you seen the movie The Accountant with Ben Affleck?
You don't want me to answer that because I think I fell asleep during it. Wait, is it? Is it the Hitman one? Is that the one you're talking about? Yeah, okay.
Something
No,
like
I saw that movie.
Something like that. Something like that.
Oh, are you also a trained hitman?
No. From a professional standpoint, it's really hard to concisely put into words what we do. And that's not because we're the best accounting firm. I'm not going to sit here and say, if you don't use us, you are losing out. And that's because whether it's an accounting firm, whether it's a digital marketing firm, whether it's a advertising firm, you've got to find what's best for you and your needs. And why I say I can't really concisely put into words what we do is because you can't really lump us into one box.
Are you saying accountants provide a integral service and there's a lot that you do and you're just touching it a little bit is only scratching the surface of the wide depth of everything that you guys cover, where the word means one thing to most people, but it's actually a rabbit hole that goes down and down and down?
Correct. The way I like to think of it is, if there are any financial services that you are intrigued about, whether you need help in it or you will need help in it, and that term financial services is this umbrella, and under that umbrella is going to be business valuation, it's going to be bookkeeping, it's going to be tax preparation, it's going to be, hopefully not fraud, forensic maybe in nature. If you have a need for any of those services, let us know, And again, we'll have that consultation with you and identify, okay, based on your needs, can we help you? Yes or no? And if we can, let's create a plan to suit your needs.
Well, how could somebody contact you if they wanted to get your services and your firm's services?
Sure. So H2 Advisors is the name of the firm. We have a website, obviously. We're located in the heart of downtown Ocala on
Hmm.
the corner of Northeast 1st Street and Northeast 1st Avenue. It's a gray building with white, cream, and blue accents. We've got a blue awning with 101 up top. It's literally right on the corner. So if you know where Sayulitas is, hopefully I'm
Hmm.
saying that right, or the old probation office, we're catty corner to that downtown.
And are you guys locked to Ocala or Florida, or can you do nationwide?
Yeah, we are not locked completely.
Hmm.
Obviously, with the past year, um, Zoom has become profitable, but a widely used medium for businesses. We work all throughout the state. Certainly, we have had a few cases out of state. Obviously, if you're out of state, the traveling becomes a thing. Hopefully,
Hmm.
we won't need to travel, but obviously, we are willing to do whatever we need to do to help meet your needs.
Okay. So, would you like to know something interesting? Because it popped into my head as we were talking about everything that's in depth with it. Uh, it appears that the shows that are produced last week and that are being produced this week have a theme to them. And I don't know if you've seen the shows before, but last week there was a very heavy art theme, as we had Mike from downstairs, or Pappy, if you know him that way, and then we had EJ on, and they were both artists with studios. And I just made the connection because our guest tomorrow is actually going to be a representative at a credit union here in town. So I guess this week we're having a very financial theme, and I think it's just funny and something to bring up.
There you go. I
That
like that.
it's almost like Shark Week, but I guess without the sharks.
Yeah, we find the sharks. We aren't the
Hmm.
sharks. We find them.
Yeah, so it's interesting how I guess these terms that we use to describe certain jobs are just so much more in depth.
Yeah.
And if you just look a little bit into them, they're far more interesting and intricate than I think people generally give them credit for. Because when I think of an accountant, right, my idea of it is a guy on a computer with an Excel spreadsheet in front of him, and that's their entire job,
Yeah.
right? But I mean, just having you here and talking about it, uh, it's obvious that there's far more going on behind the scenes.
There are still those accountants with the spreadsheets, and that's all they do. And more power to them. If they're loving their job, that's great. But I appreciate you having me on so I can give more knowledge to those who maybe aren't aware
Well,
of all the services.
that's the point, right? It's because I don't know these things. I don't know what you do.
Right.
And when you were at A Million Cups, I guess it was 2 weeks ago
2 weeks
now,
ago, yeah.
we tried to have you on. You really piqued my interest when I was sitting behind the camera, and I was like, "Oh my god, he's talking about all these things. They do all this stuff. Cool, let's talk about it." Because one of the reasons I do this show is to teach people about this
Mhm.
kind of thing and maybe inspire them. Because I don't even how did you even get into accounting? Like,
That's
who's a kid and goes, "Man, one day I'm gonna be an accountant."
the short version of that
You
story.
saw that movie, didn't you?
No, no, no. The short version of the story is I was at UF getting my undergrad. My undergrad's in mathematics,
Mhm.
and I was going to be a teacher. Saw that wasn't a very viable option for me, and utilized some career resources at UF, and found accounting. My dad knew David
firm.
Hoffman here
Mhm.
locally, and said, reach out to him. He'll probably give you an internship. He did, and here I am.
That's awesome. Yeah, I do love this show because it gives opportunity to learn, and that's kind of the point,
Yeah.
right? I mean, that's why I love doing this show, and I hope at some point it becomes profitable.
That's the goal.
That is the goal, because I think we provide a valuable service of just educating people about things that they just don't know,
Yeah.
and it provides a chance to have fun conversations with people you don't really talk to every day, right?
That's very true. And, if there are things that we talked about that, people might have further questions
Hmm.
on, they can call our office, 352-355-8333. Or you can email me. My email is Kyle, Kyle, at H2, that's the number 2, ADV.com.
There you go. You just did a very good plug. That's how you do it. Well, that's been everything from this episode of the Zeneration Nation podcast. Thank you again for coming on, Kyle. It was an absolute pleasure to have you. Uh, and if you guys enjoyed the conversation and you need his services, look him up. I'm sure he'd be happy to help you. And if you enjoyed this episode and want to see more, just leave a like, leave a comment, or subscribe. It's absolutely free and it helps the channel grow. And hopefully, we'll be able to get information about what Kyle does to the masses. Because, I mean, really, how many people know what my accountant man does? Right?
Not many.
All right. Well, thank you, everybody, for tuning in. And I hope you guys have a nice day. Later.